If you listen to Trump and Besant and everybody, they're like, first get the dollar down, get rates down, get oil down, get the tariffs done, get some tax revenues coming in from that, maybe give them out to some people, the bottom 50%, whatever it is that they do with this. And then it's about growth because they need the economy growing. And Besant has been really clear about this. Is like, we need Main Street to be making money again. And the issue has been rates have been too damn high. And they need to get the ISM through 50 and accelerating higher, which is the classic sign of the next phase of the cycle, which is when liquidity is really happening, the business cycle's happening, earnings get recycled, people start taking risk. That all lies ahead. But because the ISM is still bottoming, which is unbelievable, it's the longest bottoming pattern, I think, in the history of the ISM now, it kind of almost certainly pushes the cycle into 2026.
Yeah.
Which means we've got 12 months ahead.
Raoul Pal discusses the current economic landscape, where key figures like President Trump and Treasury Secretary Besant are focused on lowering the dollar, reducing interest rates, and cutting oil prices to revive growth. He highlights that the business cycle is still in a bottoming phase, with a full recovery expected closer to 2026, with Bitcoin playing a significant role in the shift. Pal believes that Bitcoin's performance will improve as global liquidity conditions ease and predicts a potential rise similar to past bull markets in 2017 and 2021. He compares current market conditions to previous cycles, suggesting that Bitcoin could experience substantial growth in the coming month. Pal expects Bitcoin to see another major rally as financial conditions improve, with possible gains similar to previous cycles. The next few months could be key to Bitcoin's price movement, setting the stage for a potential breakout.
There's a reaction to the Trump headlines, yes, of course, but a lot of this was baked in the cake because of liquidity tightening by the rising dollar and rising rates last year. You know, price action in Bitcoin is actually not that bad today, not like the Nasdaq's getting nuked, and I'll talk about the Nasdaq in a sec as well. So global M2 versus Bitcoin, either a 10-week lead or a 12-week lead, doesn't really matter. The Nasdaq is all the same as well. You can see from the chart here, we're kind of in the bottoming zone. Bitcoin, 3-month percentage rate of change, has actually priced in all of the tightening of financial conditions and should very soon start pricing in the other side, which is this financial conditions easing. Now, this will be much higher again because of the last few days. So for me, it's kind of expected. Now, you can see from the black line, which is forward-looking, 10 weeks, and this doesn't take into account the current move in the dollar and rates and oil. And, you know, that just so people are aware, financial conditions, different people measure it different ways, but one of the easiest ways is, you know, an amalgamation of rates, the dollar, and some commodity prices, input prices. And we've seen a massive move in oil. We've seen a massive move in rates. They formed a nice head and shoulders top. Looks like, you know, we should see rates back down at 3.5% in 10 years. And we've seen an enormous move in the dollar as well. It's a gigantic move in the dollar. And the dollar is the big daddy of all liquidity measures because everybody's in debt dollars. And I said this from the beginning is like, China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is. They'll agree something because they need the weaker dollar because they need to roll their dollar debts. Everybody needs to export goods, and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar, and the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing, because we've both identified it's like next 3 months, for sure higher. There'll be consolidations. Next 6 months, probably next 12 months. That's kind of how it feels, pretty certain. Now, the question is whether it's next month higher, which I actually think. I think we probably end up, you know, higher within 2 weeks' time than we are today, put it that way. And so global liquidity means that a lot of it's going to be driven by the dollar, which is now trending lower. And if it breaks kind of the 100 level, it can move down to, in DXY, it can break, you know, it can move down to 90 or so, which would be, you know, a good cyclical dollar bear market in a structural dollar bull. Then we've got the central banks and others, and that's driven probably by China, the US, and others, I'm guessing, using other liquidity measures within that. So, China's probably the big one in that. Bitcoin has been dominant. It was dominant all up until this point in the prior cycles in 2017 and also in 21. It stays dominant much longer than everybody expects. And then it tops. And this is the monthly D mark. And we put in a 13 top. And if I switch that to the daily now, we are getting very close to having a 9.13.9 top. That'll be 2 days away, which would match to me with the 9.13.13.9 on Solana as a bottom. There's a lot of things that are getting close to saying the liquidity cowbell is coming and the structure of the market may well change with it and usher in the next phase. What I talk about, the second phase of the banana zone, which is really often alt season starts at this point. If I think about the crypto years, year 4 of the cycle being this year, year 4 of the cycle was 2017. Look what happened. Year 4 of the cycle was 2021. Look what happened. Year 4 of the cycle, we're coming in at the low, exactly as we did every time. It's interesting.
Raoul Pal highlights an economic strategy led by key figures like President Trump and Treasury Secretary Bessent, aimed at easing financial pressure by lowering the dollar, interest rates, and oil prices while boosting revenue through tariff. He emphasizes that the current phase of the business cycle, marked by bottoming indicators like the ISM, may extend recovery into 2026. Powell suggests this period could usher in significant economic transformation, with Bitcoin playing a pivotal role in the evolving financial landscape. As global financial conditions improve, Powell foresees Bitcoin benefiting from increasing liquidity and a weaker dollar, potentially echoing the gains seen in past market cycles like 2017 and 2021. He believes the next few months could mark the start of a substantial rally, driven by easing conditions and network activity, positioning Bitcoin as a key player in the next phase of economic growth.
If you think this thing through, there's either the cyclical moves within the longer-term downtrend of Bitcoin being more dominant, but then there's these larger cyclical patterns of a much larger reset. Forward, we've got global M2, and the financial conditions index is screaming higher, whilst the economic surprises index of how the economic activity is versus expectation should start raising too. So the growth shock has largely been put in the price. I think I've got somewhere here how similar that is to the kind of 2021 period where you come into the year and then the whole thing just gets subdued for a period of time. Yeah. Also, the one I look at a lot, what's not on here, is 2017, where I think there's a lot of similarities. And this is basically what I've always talked about when I talk about network activity and Metcalfe's law. This is a much more detailed way of establishing how vibrant is the network, how real is the activity, what's the longevity like, what's the growth like, because these are the things that drive price. We know that obviously global liquidity drives price, but the other thing is the network has to be valued, and network value is what drives the long-term secular trend above and beyond that of liquidity. This is the magic of why some cryptocurrencies do so well versus global liquidity. For example, we see that Bitcoin is almost like 8x the performance of the NASDAQ. And so the NASDAQ is 97.5% correlated to, or it has an R-squared of 0.97 to global liquidity, and Bitcoin's 85. The reason it's 85 is because when you get to a bull market, it actually wildly outperforms because of this, which is the network adoption. And we've had 7 of these corrections since the bottom. And the last cycle we had 5 in the last year of the cycle. The one I look at a lot is 2017. We had 5 of them that were all like 30% plus. And then so we bottom over the next 4 weeks, probably more sideways than sharp down. Obviously, alts probably still continue to bleed for that period of time because Bitcoin needs to reestablish itself. Coming out the other side, we've got a lot of discounted stuff because people, I think, mentally in their heads are like, oh, well, I want to start getting out by October because... and so they keep getting worried we're not going to make the price returns. But we got a year to make price returns. And the last year of a bull market we've often seen 2, 3, 4, 500% return.
Raoul highlights efforts to ease financial pressures by reducing rates, oil prices, and the dollar's strength while stimulating growth through tariff. He predicts these adjustments will set the stage for a significant economic transformation, with Bitcoin at the forefront of the next cycle. Powell foresees Bitcoin leading a new market rally as financial conditions improve, drawing parallels to past cycles. He suggests the coming months could signal the start of significant growth, potentially peaking by 2026, with Bitcoin positioned to outperform traditional markets. Can Bitcoin surpass traditional markets in the next economic cycle? Will improved financial conditions accelerate cryptocurrency adoption?